The Central Bank of Iraq has issued a statement rejecting reports that the U.S. has halted shipments of physical U.S. dollars to Baghdad, pushing back against claims of a financial freeze circulating in regional media. The denial followed reports by broadcaster Al Hadith on Monday, which claimed that Washington had suspended all currency transfers and formal security coordination with Iraq following a series of aggressive diplomatic and legal moves by the U.S. State Department. The conflicting reports emerged during a period of high-stakes political horse trading in Baghdad. While the CBI maintains that the flow of currency from the Federal Reserve Bank of New York remains uninterrupted, the rumors of a dollar crunch have already rippled through Iraqi markets. I'm really not sure why they're not on stablecoins or something at this point. It's a little bit shady, to be honest. These developments follow a Friday announcement from the State Department sanctioning 7 senior commanders of Iran-aligned militias, a move that analysts suggest is part of a broader American effort to pressure Iraqi political leaders into excluding paramilitary figures in the next government and implementing a comprehensive disarmament plan. The friction between media reports of a financial halt and the Iraqi government's official denial underscores the precarious nature of Iraq's economic sovereignty. I mean, they're not sovereign. That's kind of the point, I think. Even if shipments continue, the mere suggestion of their suspension serves as a potent tool of political signaling. In a country where the daily dollar auction at the central bank dictates the price of bread and fuel, the threat of currency withholding represents the ultimate nuclear option for Washington. By linking the availability of cash, and he literally means cash here, by the way. This is like pallets of cash that get flown in, to the exclusion of sanctioned militia leaders from the executive branch, the U.S. is testing the structural limits of the Iraqi state's dependence on the American financial system. The alleged suspension of dollar shipments and security ties was intended as a direct response to the continued presence and influence of terrorist militias within the Iraqi state apparatus. The broadcaster cited sources stating that Washington's cooperation is now contingent upon the formation of a government that provides a transparent account of those involved in recent attacks on U.S. facilities. However, the central bank's rebuttal was explicit. It characterized these reports as inaccurate and insisted that the institutional mechanisms for currency transfer remain operational and aligned with international standards. According to the FT, Financial Times, U.S. officials have been warning Iraqi leaders for weeks that the inclusion of militia-aligned figures in the government, specifically citing the election of AAH political leader Adnan Ayyan as first deputy speaker of parliament, is incompatible with the U.S.-Iraq partnership. Washington's grievances center on the coordination framework, the dominant Shiite political alliance currently tasked with forming the next government. The alliance includes several factions that the U.S. maintains have direct ties to the Iranian regime. This institutional context of this dispute is rooted in a post-2003 arrangement where Iraq's oil revenues are deposited in the New York Fed. To facilitate domestic liquidity, the U.S. Treasury facilitates the delivery of physical dollar pallets to Baghdad. If this supply were truly halted, the central bank would be unable to sustain the currency auctions that prevent the Iraqi dinar from entering a hyperinflationary spiral. A similar temporary halt in 2015, triggered by concerns over cash flowing to ISIS and sanctioned entities in Iran, led to immediate market instability. While the CBI denies a current halt, the threat remains a central component of the diplomatic landscape. And it continues on, but the bottom line is that Iraq is going to be, Iraq is pretty much in massive trouble.